Hello traders and welcome to another video review. Today is Monday, March 10th, 2025. Let's take a look what is going on the economic calendar today. Medium and very important event are here on our calendar. Let's take a look what's happened during the Asian session. During the Asian session, data from Japan were released in form of the current account and adjusted current account. As you can see, current account beats the expectations, and the adjusted current account is a little bit below the forecast of 1.97 trillion. German industrial production beats the expectations of 1.6% with the actual number of 2%, way better than minus 1.5% last reading. Trade balance shrink from 20.7 billion euro to 16 billion euro. CPI in Denmark 2%. Consumer climate in Switzerland minus 34, and please remember today we will start the Eurogroup meeting at 11 o'clock, and at 2 o'clock German Buba President Nagel will give a speech. So that's about it. This is what do we have in the calendar for today. Not very busy day in terms of the data releases. This is why, without any further ado, let's just switch to the technical part. We'll start with euro dollar. Short-term chart, like 30-minute chart of the euro dollar, is showing us that market broke above the 61% of the Fibonacci retracement of the big swing down. I will show you this swing in a minute. 1.0808. Local high was made at 1.0889, so that's apparently 81 pips above the Fibonacci level. And it looks like the market wants to test this level from below. So now our range is located between 1.0768, 1.0889, so roughly around a little bit more than 100 pips. Let's go to the 4-hour time frame chart. There you go. You can see the pin bar here on the top of this move. Very spectacular move very nice move, spectacular move of the euro dollar. Red bar here, kind of a pin barish, definitely bar. There is another pin barish bar, little bit of the pullback and go back to the 61% of the Fibonacci retracement. Now it's been violated, it's been broken. We don't need it anymore. All right, so range still established, only a substantial breakout below 1.0766 might change the outlook to more bearish. The market is coming off the extremely overbought conditions. Nevertheless, it's still at the level of 64 points, so we might go here to test this range low and then reverse back to the upside. So the outlook for the euro dollar remains bullish, and the swing I was talking about is this one, the highs from the September 2024, lows of the January 2025. That's the one big swing here, and we got this situation with the breakout to the upside. That's 61% of the Fibonacci retracement. Where is the next technical resistance level? Very important technical resistance level is located here at, let's say, 1.0938. So that's the resistance, and it's been tested previously when this level was in line with the 100 periods moving average. Okay, so very nice level before we will hit the swing high. But that's a long road to the swing high. Let's switch to different pair. Let's switch to the British pound. Now, cable hit the 61% Fibonacci retracement as well, and it's definitely reversing lower. We broke above the upper channel line, right? That's right. We hit the level of 1.2944, almost 1.3. And now the market is trying to move a little bit lower as the pullback is in progress. Please take a look at the momentum. Momentum is definitely coming towards the level of 50, coming off the extremely overbought conditions. So the levels of let's say 1.2868, which is the range low, local range, short-term range low, that's the support, might be tested very, very quickly. And when we're done with this level, the next target is located at, let me just take a look, 1.2834 or 1.2811. That's another demand zone, and we are back inside the channel. If you want to take a look at the daily time frame chart, it looks like this. So very important situation here with the 61% Fibonacci retracement. If we zoom in, let me just zoom in a little bit more, you can see that that might be a bearish engulfing pattern at the top of the move. So please keep an eye on today's close, daily close on the British pound. It looks like it might be this kind of the candlestick formation. US dollar versus the Japanese yen. What do we have here on the daily time frame chart? New lows, almost new lows were made. The low is right now 146.97, very close to the level of 30 on the RSI, which means extremely oversold conditions. We are below the 100 periods moving average on the daily time frame chart, below the major technical resistance now. So let's switch to the 4-hour time frame chart, classical textbook example of the down trend. Local low 146.97. We are very close to the local lows. There is almost no momentum to the upside. The downswing should continue lower. Let's take a look on daily. What are the targets? Well, the first target might be somewhere around this one is hit 147.19, so maybe this one 146.50 is the next target for the US dollar versus the Japanese yen. So that's the situation here. Let's take a look at the gold, of course. What is gold doing on a daily time frame chart? Consolidation around the technical resistance, or you can see it quite clear here. This is our range. And the range high, as you can see, was a little bit above 2,929. This level has been violated. The technical resistance has been violated, and this one will now act as the local intraday technical resistance, 2,929. We oscillate around the 100 periods moving average on a 4-hour time frame chart, and we are still above the major short-term demand zone located between 2,877, 2,888. So any breakout lower, there is still this technical resistance, and then there is 2,792. Any breakout higher, we attack the swing high at 2,955. Momentum 47 points, a little bit below the level of a 50. However, as you can see, there is almost no movement in the momentum for all of the weekend, and that means that the bulls hasn't decided yet if they want to continue the upward movement. And last but not least, the Bitcoin, and the Bitcoin is basically doing very well, as you can see, especially if you are bear, because we push this level again lower. We push the price again against lower below the trend line. So actually, well, that was a little bit off the trend line, this swing to the upside. However, it still looks like the market wants to move, stay below this trend line and stay below the supply zone. Let me just go back to the bigger chart. There you go. We broke below the short-term blue trend line. Local low made in the form of the pin bar was, let me just take a look, 80 something, yeah, 79,936. So there's a bounce, of course, because that's the situation here with the bounce. So let me just mark this low as the local low as well. Okay, we have a bounce, I have a kind of a pin bar hammerish pattern, slide of the bounce from the extremely oversold conditions, but there is definitely no upside momentum on the Bitcoin whatsoever, and we should see soon very nice movement to the downside, especially if we break below 78,216, which is the low from the February 28th, made 10 days ago. So the outlook for the Bitcoin remains bearish in the short term. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.